All right, guys, switching gears here. Tesla investors disappointed over the holiday weekend after the company posted its Q2 delivery numbers. Deliveries came in short of expectations at around 254,000, though the production came in at 258,000, which Tesla said it was its highest production month in its history. And Brian, a few things to break down around this. Of course, the majority of the production and deliveries, they still continue to come in Model 3, that mass market vehicle, and then the Model Y as well, which is essentially just 75% of the same as the Model 3. And so with that, you have some of the production synergies there. But this is also a time where we know that there were significant price increases that are also being started to roll out. And so I think this broader theme of the average selling price that we start to see for Tesla vehicles, as well as across the technology landscape, if you will, thinking through whether that's HP, thinking through whether that's Microsoft and some of their industry units right now, especially for Apple too. I think this average selling price theme is something that we could be talking about even more so over the course of this earnings season.
Don't give away our HP downgrade segment yet, Brad. We have to talk about it a little bit later. But look, Tesla, I think the street is out here this morning. A lot of analysts I've seen are cutting their estimates for the back half of the year. You have JP Morgan analysts reiterating an underweight rating on Tesla with a price target under $400. And now the big concern is June appeared to be pretty strong for Tesla as that production ramped up. But the street has now pivoted to what the second half of the year might look like for this company. And a lot of folks are starting to say, if the economy is going to continue to slow, now this demand that has generally held up pretty well for Tesla, that may start to weaken at a time where their cost for batteries for other raw materials remains high. That might pressure profits and might put further pressure on the stock.
Yeah, and it continues to come back to where the consumers are buying in and opting into new electric vehicles. We know that searches over the course of this year, given some of the higher energy and gas specifically prices, consumers have been searching more for electric vehicles. It's just a matter of when they might get delivered. And over an extended period of time, what types of credits for the companies that are operating the production capacities, whether that's Ford, whether that's GM, whether that's Tesla, what type of credits they're given to now allow them and enable them within that production to at least have an alleviation of some of the pressures that they're seeing on the input costs to getting vehicles out there as well right now?
Yeah, I'm going to need about $80,000 in incentives to get one of these electric cars, Brad. I'm just saying, but again, I'm a gas guy. We'll table this discussion for right now. Again, you're seeing Tesla shares under a little bit of pressure here off of these delivering numbers, the top ticker on Yahoo Finance.